Hello, everyone. Welcome to another Live with Caeli, calling all investors. We're here with Caeli Ridge every Tuesday, 4:30 p.m. Eastern, 1:30 p.m. Pacific, and we are going to speak today for about a half an hour. And today's topic on February 21st, 2023, as spring market comes into roaring its beautiful head, we're going to talk about preparing to become a landlord, Caeli. I think you might know a few things about that.
One or two.
One
I'll
or
wing
two.
it. I'm winging it.
Just to give everyone an idea of how this format is happening, of course, and if you're here with us today, thank you very much for joining us. We do want you to be engaged. This is an open Q&A. We want to make sure you either use the question and answer feature in Zoom, use the chat, raise your hand if you want to come on live, whatever you want to do. And some basic topics, Caeli, just to kind of help guide the group, is going to be things like accounting and tax considerations. We've got legal considerations. We've got daily and monthly activities that you'll want to think about performing. You've got the idea of making sure you've got a qualified team of professionals to help you. And those are just some general ideas. And so from here, Caeli, why don't you go ahead and guide us through on preparing to become a landlord, please?
I'm ready. Thank you, Larry. Hey, gang. Good to be with you today. Okay, so I kind of just threw this at Larry last minute. I didn't have a chance to prepare as much as I wanted to. I wanted to have some articles that I was going to share with you guys today, but I wasn't able to get to it. So it's month end, and the pressure's on to make sure that we hit all of our close dates. I'm going to kind of take you through a few bullet points. I got my cheat sheet over here. I'm going to go through. So for those of you that are just kind of getting into this, and even if you're seasoned, you've been doing this for a while, there's still some, I think, good takeaways and reminders of things that you probably want to be thinking of or looking at as you continue your real estate investing journey. So my cheat sheet, let's just start with accounting and tax consideration. I guess that's a little heady. Why don't we go there? And like Larry said, you guys, this is open forum. So please feel free to ask questions, unmute yourself, or I think you have to ask permission for that. But if you want to ask a question, let's make this collaborative. I would love that. The more, the better. Just as a reminder for those of you on the tax side, as you're becoming real estate investors, or if you're well seasoned and on your way, very important if you're still looking to access conventional financing, Fannie, Freddie, golden tickets, do not, I repeat, do not file a business tax return that has your rental properties listed on it if you have personally guaranteed the debt. Okay, I'm going to say that again, maybe a few different ways, because I want to drive this home, because I continue to see this error, and it can be a pretty devastating one. Let me start with the rule, the Fannie Freddie rule. They say that if you have personally obligated the loan, and this is for residential property, which, just to clarify, is 4 units and below, single family up to fourplex, that's residential, 5 units and above, it doesn't apply. Residential property, Fannie Freddie tell us that if you have personally obligated the debt, whether by signing a personal guarantee on a commercial loan, right? You've gotten the loan in your LLC name. A lot of people mistakenly assume that it doesn't go against them. If you signed a personal guarantee, Fannie Freddie, you've personally obligated the debt, it will go against you. So if you personally obligated the loan and you filed a business tax return where those properties would live versus on your personal Schedule E, it will not give you the calculation for whether there's income or a loss. You do not get to keep any gain. So if within the Schedule E calculation, if it produces a positive number, you do not get to keep it within your debt to income ratio calculation. If there's a loss, I will hit you for the loss up to a maximum of the property's PITI, principal, interest, tax, and insurance. Okay, said another way, if you've personally obligated the loan on a residential property, you better file it on your personal tax return. Now, I don't want to go too far down this rabbit hole. If there are, usually you're filing on a business return, Schedule E, because you've been given maybe not the full sentence of advice. There is no different tax implication filing on an LLC return versus your personal return. Exactly the same deductions, depreciation, nothing changes from one or the other. The LLC in this example is probably about asset protection, that anonymity. The fact that your CPA knows that you have the Schedule E, or excuse me, the LLC, the Schedule C, and you're filing on that return, there's no extra tax advantage doing it that way. You haven't done yourself any favors. In fact, if you do it the way I'm describing, you're going to do yourself a disservice. The only time an LLC return, a Schedule C return, where you've is okay is if you have not personally obligated the debt. That is called a non-recourse loan. In that example, perfectly fine. We'll give you the gain. We may hit you for the loss. But just as a final reminder, before I go on to the next topic here, make sure we're looking at your draft tax returns. These are some of the things that we're going to look at with you and for you to prepare you for how you do want to file and maximize your qualifications for the remainder of the year once that bell is rung, once that tax return is filed. Any comments, questions about any of that so far before I move on?
Yeah, yeah, thanks for the break there. So for those that have just joined, because we had a bunch of people join after we started, we're going here with Caeli. She's talking about preparing to become a landlord. She's just going through the topic for accounting or tax considerations. If you have any interest in participating, which we thoroughly encourage you to ask questions, however you like, you can either use the chat function in Zoom, you can use the Q&A. And if you use the little raise hand feature within Zoom, if you want to come on and ask your question directly instead of typing it out, please do. No questions from that, Caeli,
okay.
but great information as always.
Okay. All right. So legal considerations. This is really about the LLC. That's what I'm going to focus on. To LLC or to not LLC is the question, right? I talk about this constantly. Most investors tend to put their properties in a LLC. To be clear, that is a layer of anonymity. All that's going to do is it's going to create a kind of a shield between you and the LLC, so that in the event of lawsuit, the individual is not going to find those assets to attach. Be very clear that if you're going to set up your LLCs, make sure that you are not the managing member. You want to have somebody else's name as the I'm spacing.
Registered agent.
Thank you. I think I did that before in an
You
episode.
did. It's a stumbling block.
I totally did. I don't know. I'm going to have a tattoo. The registered agent. So if you're, let's say, for anybody that has gone and established their own LLC, which by the way is extremely easy. If you're just doing your first LLC, you probably don't need to pay hundreds or thousands of dollars to an attorney to do this for you. You simply go to the state Secretary of State website, right? Whatever state you've elected. Within that, it's probably a very easy navigation to find how to create an LLC. You plug in the information, just the registered agent, don't put your name there because that is public record. If someone were going to do a title search, or they were going to do a search in different counties or cities, that would come up, your name would come up and it would be a match. So make sure that you do somebody else as the registered agent. I mean, it could be your kid's name, it could be your real estate attorney, whatever. Now, going back to the LLC, is it worth it? Is it not worth it? Obviously, that's going to be very individual for you guys to decide. I have always held my properties in an LLC. I just like that extra insurance. It helps me sleep better at night, but I've constantly been telling my clients for years that in 25 years of being in this space and having properties and putting them in LLCs, I've never found myself in an instance where the need for that anonymity was necessary. So the question then begs, why wouldn't you just have gotten an umbrella insurance policy, maybe $1 million liability policy? And the answer is I certainly could have. You certainly could have done that. Making sure that everybody is up to speed on the current guidelines. There is no more due on sale clause with the LLC conventionally. That is old hat information, old guidelines. You will not have any issues with due on sale. And for those that aren't familiar what that means, there used to be language in conventional loan documents that stated if you change title ownership, they can execute this due on sale, which was a scary way of saying you'd be forced to refinance that loan at your expense. Okay, they're not going to show up at your house with handcuffs or levy your bank accounts, but you'd have to refinance the loan at your cost, and that was enough incentive to avoid it like the plague. In the meantime, they have since changed that rule. I think we have this up on the community. We talked about this not too long ago. I think it was the last couple, maybe a month ago. As long as you own the majority or you have majority ownership in the LLC, if you're the only person on the loan, that's perfectly acceptable. Okay, so if you are the only person on the loan and you have a 50-50 LLC with a business partner, you don't own majority, right? In that example, you're going to want to have 50.01 and the other individual is going to have 49.9, right? You have to maintain majority in order for that due on sale clause to be void. If questions come up, you guys ask me.
Yeah, we've got a couple questions if you want to take a quick second for a break.
Sure.
So I'm going to put these in logical order for what we're talking about. So first one that came up was questioning, Caeli, should the LLC be set up in the property for where in the state for where the property or properties is located?
It's a very good question, and I'm going to beat Larry to the chase. I am not an attorney, and I am not giving you legal
Thank you,
advice.
Caeli.
Okay, he's going to follow up and give it to you anyway, even though I said it. Here's what I have done. The advice that I was given early on was that, yeah, you should set up the LLC in the state in which the property is located. For me, that did not make sense. I had lots and lots of properties, and at one point, I think I had, I don't know, 10 different LLCs for just as many properties ish, all in these different states. All it did was require that I now am obligated to file another state tax return. I didn't find any incentive in doing it that way. You do not need to have the property the LLC established in the state that the property is located in. In fact, I found that as a deterrent. So my personal experience, what I did is that I ended up looking at, I've got LLCs in my home state, Nevada, Delaware, Wyoming. They add a little bit extra anonymity. I think that one or two of those has some extra tax incentive as well. Please check with your tax preparer. But no, for me, I did not value or find any benefit in establishing in the state that the property was located in. And while we're on that topic, I would say that, again, for me, I typically will have 4 or 5 properties per LLC, maybe 6, usually not more than that. You don't want to put too many eggs in one basket.
Awesome, Caeli, thank you. Bill's asked a couple different questions. I'm going to see if I can wrap them into one. So first, we're going to stick on topic of LLCs. And as a lender, do you view a multi-member LLC any differently than a single member LLC for lending purposes only? Does it make a difference?
Hi, Bill. I think if you're asking from a qualification standpoint, and you're purchasing and you want to close the loan in an LLC, if that's what the question is, because this could mean a couple different things. But if you're trying to get a commercial loan where the loan and title will close in the LLC name, depending on your ownership, the other parties may need to be on the loan with you. If it's a non-recourse where there's no personal liability, right? You're not signing away your firstborn. Then I believe just you is fine as long as you have more than 25% ownership. If it's a recourse loan where you're signing personal guarantee, I think all the members of the LLC must be present. I think that's your question, Bill. If not, maybe get me offline or ask another way.
Yeah, and I would also suggest, Bill, I think you've got some other questions that might tie in. There was a question earlier about the benefits of Fannie Freddie over going commercial. I think that's been covered before. And so if anybody's listening to this, you have any follow-up questions on anything that Caeli said, please just give the office a call. The number is 855-74-RIDGE. You can also just send in a quick email to info@ridgelendinggroup.com. And Caeli or any dedicated lending specialist, honestly, will be able to answer any or all of these questions for you on the spot. And to go back, Caeli, you mentioned earlier about the due on sale clause. Yeah, if you go into the community and you search for due on sale, you'll find the Fannie Mae and Freddie Mac PDFs in there with the highlights you mentioned.
Yeah.
That's all the questions we have so far.
Okay, let's move on then. Next on my list is daily and monthly activities that you'll want to perform. So this assumes that you already have the investments, right? If you're searching for new investments, obviously that's an everyday thing. You're going to be out there probably scouring the different turnkey sites and websites and county records, looking for maybe first default you can make offers on, et cetera, et cetera. But for those that are already have the properties, micromanaging your property manager daily or monthly activity. I think a once a month check-in should be more than ample. If you are having to micromanage your property manager, there's something wrong. You probably are in the wrong place. You probably want to start looking for a new property manager. You really want to be, you talk about turnkey and passive income. While I don't know if true passive income is an appropriate way to describe real estate investing. It's not totally passive, and I don't think it should be. I don't think any investment really should be totally passive. But your property manager, if they're worth their salt, you shouldn't have to check in very often. There is also in the community, guys, this might be some, for those of you that didn't see this, I don't know what it's called though, Larry. I don't know if you want to check on it, but there is a property manager checklist that we have in the community. By no means is it complete. It's not in any particular order, but these are some of the questions that you would want to ask any potential property manager as you're vetting for them to take on that property or your portfolio. Some good stuff in there that I would want to have answers to if I'm selecting a property manager. But if you're having to check in on them and you're the one coming out and asking for updates and information, more often than not, I would start shopping for a new property manager. But otherwise,
for those in the community, if you search for property manager checklist, you'll find the post and it has the PM questions checklist PDF right there for you.
Yeah, there's some good, it's probably 20 questions in there. There's some good stuff in there. Yeah, otherwise, the other thing about property management, they should have automated systems where you have your own unique user ID, right? Credentials to get in, and everything and anything about that property, it should be at your fingertips. You shouldn't have to call, you shouldn't have to question, you should be able to find everything that you need right there in one space, one place, to get whatever data you need on that property. That should be, you hope, the extent of your monthly activities for any existing property. What's next? Any questions, Larry, that we want to grab at?
So there was a question about how to join the community. So in the chat, I put a quick hyperlink. It'll get you right into the community if you're not part of it. So thank you very much for asking that, Sequoia. Armando, you asked a question. It says also access to run report statements.
I think that's a statement about property management.
Property management, right. Carlos asked Caeli, what platforms are most user-friendly for self-managing? Is that something that you've seen before?
I don't have an answer for you, Carlos, but I have a comment. Self-managing, let's take a minute and talk about self-managing. For those of you that have attempted self-managing, I'm going to venture a guess, more often than not, that you very quickly learn that is not what you want to be spending your time on. Self-managing real estate from a property manager perspective is almost a full-time job, whether it's 1 or 2 or 10 properties. It is a massive commitment. Definitely not something I'm interested in doing. However, for those that have never done it before, if you can, if it's possible, if it's feasible, I recommend it at least for 6 months so that you have a good understanding of what goes into all of that, so that when you are vetting for a property manager or the expectation that you want for a property manager, it's going to be a lot clearer if you have some of your own, on the job training perspective. So if you haven't done any property management, I would encourage you to take a whack at it, even for a short period of time. For those of you that do it for your properties, good on you, man. You've got my respect. It's not easy, that property management gig. Anyway, I'm sorry, Carlos. If anybody wants to chime in that's doing property management that has a platform that they use that's user friendly.
Yeah, go ahead and throw it in the chat. Excuse me. That would be great. As a follow-up, Shirag asks, you recommend any strategies for managing property management companies while still meeting reps or active participation qualification?
Oh, okay. So what he's talking about, good question. So he's talking about the real estate professional exemption. This is an IRS code that says that you have to meet X in order to establish this exemption within your taxes, so that the glass ceiling of deduction goes away and you can really start maximizing what you can take on a Schedule E. The biggest active rule is it 700 or 750 hours a year? Is it 750?
Thought it was 750 myself, but I'll
It
go
might be
check.
750. Okay. So however many active hours per year you have to be able to document in some kind of log, that's the big one, that you've participated in real estate investing.
750.
And 750. Okay, if you divide that, I'm sure I've done this math before. I should probably double check myself, but I think that ends up being about 2 hours a day. Now, it sounds like a big number, but when in reality, for example, the 30 minutes that we spend here together, or an hour, or whatever it ends up being, this counts, right? The amount of time you spend on the phone with your lender, and we are strategizing and we're coming up with our roadmap, right? We're planting our seeds. That counts. The amount of time you spend online looking for properties, vetting turnkeys, vetting your property managers, all of that counts. Let's say, for example, you found a new turnkey that you like in Cleveland, Ohio, and you're going to take a trip. You're going to leave on Friday. You're going to come back on Sunday. You're going to meet with the turnkey. You're going to go and tour some of the properties, whatever. There's 72 hours right there. So it's not, and especially I would say, once you have 4, 5, 6 properties, I promise you, it's not a stretch to think that you're putting in on average 2 hours a day. So go back to would you read the question again? Because I think I missed a detail in that, Larry. I got off on a tangent.
No, it's okay. So the question was, if there's any general strategies for managing property management companies. I think the intent of the question from Chirag is just, am I going to have any problems managing property managers for my properties? Will it affect, have you seen it affect the reps or active participation? Have you seen that negatively affected?
It shouldn't. It shouldn't. I think it's really going to come down to, Chirag, how many properties you have. I think legitimately, this is my opinion. Check with your CPA, please. Once you get to 4, 5, 6 plus properties, I don't think you're going to have any issues with the IRS and a potential audit that would say that you're not spending the amount of time that would justify real estate professional exemption. Check with your CPA. I am not a CPA. So yeah, okay, look, I can see, I just opened up my notes here. Gina, CPA had me document every minute, right? Absolutely. Oh, and it didn't count? Gina, if you want to take yourself off mute.
Yeah, I can ask you to mute.
I'm
Gina.
curious.
Like Gina had a question too.
Basically, I went through every single email. My husband had spent quite a lot of time working on them, and so we did go ahead and go through that route. But she sent us a spreadsheet, and maybe I took it too much, but she showed me an example, and it was like spoke with Caeli, about that 15 minutes, 30 minutes. It was literally documented, and I went through email, and then there'd be those long email chains, and I calculated that took me 10 minutes to come up with. And she's like she wanted it overkill, like because people, if that got, what do you call it, discounted by if they said no, you're not, that would throw your whole tax off. So it's not a little thing to claim that. That's my understanding.
So, but when you say, and travel flights did not count, tell me what you mean by that.
When you get on the plane, you flying to 5 hours here or there, that did not count.
I'm not
count that.
Okay, I'm not a CPA, but I would encourage you to check around on that, because I've always done it. Is she real estate centered? Is that her focus, or is she just?
She is, but to your point, maybe because you have a track record, and maybe there's something about the attraction, and also if you're a bigger fish, they're going after little fish, not big fish.
I guess. So, be careful, you guys. Yeah, it's good feedback, Gina, for anybody listening. You want to, obviously this means you're being audited, God forbid. But if you are anybody that's been audited, no thanks. You want to make sure that you're setting yourself up for success. You don't want to be taking shortcuts. That's not what I'm talking about. You've got to document. But similar to what your gal told you, Gina, we had a log and we documented everything. So anyway, that's my 1.3 cents worth, you guys. Check with your professionals.
Gina, did you have any follow-up questions? I don't know if you had your hand raised for something else.
I did. I had a question, but it's kind of off at, moving on to
Okay.
something that I'm personally struggling with is we do have a couple rentals, but the rents come in at different times during the month. And I'm really just struggling with my budgeting of going, this is the day, because now I don't know where my money to reinvest is, because it's like a constant in and out and flow. And I never have this like, all right, that's the month. I'm not an accountant. So I'm not, so I keep thinking, well, I want to set aside this money for XYZ, or maybe I'll pay it forward to next month's. And so I'm just looking for strategies of how people track their, that income. So again, it's what's my monthly activities. So this isn't always, that's my question.
Yeah, you're talking about consistency, right, Gina? You want to be able to count on something so that you can plan for future.
And I can also know, okay, good. I hit my requirements, and now this extra, yes, I can start socking this away for a different investment. But it always feels like it, and then you always have your CapEx thing come up.
Yeah.
And your eviction and yada yada. But
okay, so it's a great questions, a couple of different things to unpack here. So the first thing I would do is going back to vetting your property manager. Okay, you want to have consistency of tenant occupied. So one of the first questions I'm going to ask is, what's their vacancy factor, right? What's their vacancy rate? 2 years, 1 year?
Well, I'm just about like the monthly rents come in. I have properties all over, so I do have 5 property managers. That's why I'm saying they're coming in at different times, not the tenant. I'm talking about from my PMs with the way they do their accounting. So it's coming into my account at different days throughout the month. And
I have a thought. I have a scenario that might work, right? It's probably not going to be foolproof. I'm sure that we can find ways in which it would derail. But if you were to collectively send the email to all of them and let them know what you're dealing with, what the ask is, what the wish is, that you'd like to have rents received by the 5th, if their accounting software does it differently for whatever reason, there may be some incentive that you can give them by saying that, you'll up the property manager 0.5%, the fee, or something to the effect that will incentivize them to all get on the same page. Have you ever asked the question? Because truly, no ask them, no get them, right? Maybe go out and say, what can I do to incentivize the tenant, and or within their software, maybe there's some issues there to do it here. Generally speaking, if I had to guess, Gina, the ones that start earlier in the month versus later in the month, you probably have an easier time getting those that are paying in like the 15th. Now that's if you're owing the money.
Do you see what I'm saying? Exactly. Yeah. I got some coming in literally. I mean, I have rents coming, kept the draw throughout. I'm looking at a list. It's like almost every single week. And it's kind of like, I'm not just trying to change their system or anything like that. I'm trying to create my own system.
Sure.
Given the system, given what I'm dealing with. And so just for my own, tracking, like I'm just looking for like, I can figure out a spreadsheet, and I kind of figured pick my 20th, the 20th will be the cutoff date, but I'm just curious what other people experience.
So just to kind of put it out there, Gina, just to kind of put the question in a bubble, so to speak. What you're looking for is how is everybody else making sure that you're tracking when you've got, especially because you've got multiple properties, how do we make sure that you're tracking both your receivables and your expenses within the month without going completely nuts because you keep receiving checks at different times of the month?
Yeah.
Yeah. So Caeli, I mean, you owned a ton of property, right? So from an accounting perspective, was it an accounting platform that you used? Did you use a spreadsheet?
I had 2 full-time employees.
Did you hire employees?
That's not going to help you. Yeah, I didn't. I almost just threw out a expletive. I didn't mess around with that stuff. I had people handling that for me.
Yeah.
But I would truly, I don't think there's anything wrong. I'd check with the property management companies and see if they can accommodate.
Yeah.
Or as many of them as possible can accommodate to have them coming in on the same day. Because rent is due by the 5th. right?
Yeah, exactly.
And if you're not paying, you're getting a pink sign on your door. So it's due. So, maybe make it for the 10th and ask everybody to accommodate, see what they say.
And
That might be the easiest solution.
I think, Gina, I think the one thing I would give you feedback on is, remember, this is your business. You're the boss. So
Well, that's
you
my
have
point.
you have to decide on what you need to work. And
Yeah,
if you
yeah.
can't find a property manager that works the way that you need to work, then you need to find a different property manager.
Yeah.
And it's not always a perfect answer, but I can tell you that the struggle's real, and you have to keep working and finding people. This gets into the last point, Caeli, right?
Yes.
Surround yourself with a professional team that supports you.
Yeah.
I think that this is a real good talking point, and I think a real pain point for a lot of investors is amassing the dream team, because there's so many players, right? When you start getting into real estate, depending on what your strategy is, it's kind of crazy complicated when you're doing the fix and flips and you've got contractors and all of that stuff. But from your insurance agent to your CPA to your lender, to your property manager, there's a lot of moving parts and a lot of players in there. Qualified, trustworthy participants, finding that group of individuals that is going to work for you. They're earning your business to the degree that they know it's not a foregone conclusion, right? So yeah, making sure that you're working with individuals that specialize in the space, and that you feel like you've got that good working relationship with. I don't know about you guys, but if I get on the phone as a consumer for whatever it may be, with a one-on-one with my I don't know, my pool guy, I don't know, whatever.
Yeah.
I'm going to get a feel for that person pretty quickly within the conversation, and if they're just going through the motions, or if they're really attending to my needs and questions, etc. Those are the people that I'm going to surround myself with and put on my dream team. So I would just say, I'm sure all of you are doing that, but and if you feel like one isn't performing, it's time to start looking, and maybe you should be challenging each of your support team qualified members, right? What have they done for you lately? That was a song, right? Who sang that? Was it Janet Jackson? Maybe that should be our theme song.
Sure. There was Gina, thank you very, very much
Thank you,
for your
Gina.
questions and your
Yeah, it's about me
participation.
being a business. I'm learning how to be a business person, which is like, like you said, I thought this was passive. It's like, what?
Yeah.
No, it's a business.
Thanks.
I did want to follow back before we go. We do have a bit of a time constraint today, so did want to come back, Caeli. There's comments with Chirag. So Chirag, do you want to? I'm going to I click the button, allows you to come off mute if you want. But just to follow up, Chirag had some answers for your questions that you asked.
Oh, hey, Caeli.
Hey, Chirag.
Hey, I just want to say thank you for the answers you provided earlier. That was very helpful
My pleasure, sir. Absolutely.
to give those. And I was just going to say, just for everyone's awareness, the 700 is 750 hours. I did check with our accountant, and out of those is 500 going to be general participation. You're traveling, your general kind of management, and then 250 of those 750 should be what they call material participation. That means getting tenants in and out, the active boots on the ground, so to speak, participation. Those combined equals 750. And I just want to make a comment. I believe it was Gina or someone else that mentioned that traveling, that their accountant said that's not allowable. That's bogus, because I spoke to our CPA and that's definitely going to be allowable. The IRS gives you tax incentives for managing real estate to help grow businesses, to help put people inside these places that you purchase. So you should definitely be able to do that travel time, whether that's going to be driving down to Florida or another state or flying. That should be all accounted for. What I would say is use a very detailed log. And that's the number one thing the IRS would look at. One of my friends is an ex-IRS agent. So they actually recommend to have a detailed log. As long as you can showcase that, the burden of proof is on you in the end of the day, not on them. So you would have to just provide that. There's an app called Reps Tracker on the App Store. Highly recommend you use that. I use that now. Caeli has been helping us and our family scale in some investments, and we've been using this tracker so far, and it's very helpful. So just want to share that with everybody.
Hey, Chirag, thank you so much. That's fantastic. Is what you just said the real estate tracker? I've heard of this, and I'm embarrassed to say I haven't even messed around with it. That's for logging your activity, right? They could utilize that. Okay,
It's your logbook, essentially, just in app form. It's made by ex CPAs and ex investors, and
cool.
a lot of folks use it now. Instead of using a detailed logbook like on paper, you will use a digital version, which is this. I think it's like 100, $200 per year. Well worth it if you're an investor. But you can log everything in there. You can upload emails, pictures, documents to support the hours you put in.
Sweet.
Highly recommend. So I just want to respond with that.
That was worth the price of admission, man. Chirag, thank you so much. I think that was a great takeaway for everybody. I'm going to check into that, and maybe we'll put it up on one of our communities and just, share screen and kind of go through it together and see just the how it flows.
Yeah, I'll see
Great.
if I
Thank you,
can
Chirag.
I'll see if I can find it in Chirag. I don't know if I have any trouble, I'll reach out to you, see if I can make sure it's the right one.
Yeah, I'll send a link in the chat. Thank you, Caeli. Appreciate your help.
You bet. You bet.
Thank you, Chirag. Caeli, any final comments today for the group? This has been a great discussion.
Yeah, I like the back and forth, you guys. Keep it coming. I would say that just in closing, we are right on the precipice of spring buying season. I expect you should all, if you're out there looking to acquire, you should be seeing the opportunity to negotiate your sales prices and or the seller paid contribution. I don't know the last time we went over this. We don't have time for it today, but perhaps next week, let's Larry make a point to talk about how to negotiate seller paid closing costs. And if you can't do it organically, what is the hack in which you can finance in some seller paid closing costs to stretch your capital a little bit further, so you're retaining for more purchasing. Maybe we'll get into that. But spring season buying, you guys, just be looking and finding ways to negotiate with the seller so that you're getting those below market price points and cash flowing better. Rates are up. Maybe we'll talk about that next week too. I think they're coming back down. We'll see. Yeah, that's
Changing.
it.
They're
I
either
know.
going up or down, right?
One or the other. I don't know. Yeah, they're up or they're down. It's got to be one of two. It's a 50-50 shot.
You might be right. Hey, everybody, thanks for coming today. Caeli, as always, we love you coming and sharing wisdom. And everybody who was collaborative today, that's what Caeli loves, right? You love people
Thanks,
talking.
you guys. Yeah, it's fun. I like it. So anybody that doesn't feel comfortable, contributing, this is a safe space. I promise. There's no dumb question. I promise you. My questions early on were far dumber than anybody could ask or say in this community. I guarantee it. So please feel free to share. We're all here together learning and making the best of it.
Thank you, Caeli. Thank you, everybody.
Okay, gang. See you next week. Bye, everybody.